welcome back to the channel, and if it's your first time here, thank you so much. Please be sure to like and subscribe. My name is Stephanie Weeks, and I've been helping with mortgage financing for over 18 years, and today we are going to talk about credit inquiries, credit checks, and what you need to know. So be sure to stay tuned to the end because there is a lot more information to come, and you don't want to miss any of it. The Weeks team would love to help you with your mortgage financing in Louisiana, Mississippi, Alabama, and Florida. We want to be your loan officer. All right, so we're talking about credit inquiries. It's also known as a credit check. Most of us, as far as lenders, when it comes to auto lenders or bankers or mortgage lenders, we call it an inquiry, but a lot of people just know it as a credit check. One of the main important things that we're talking about today is what the differences are, what you can expect, and how they affect your FICO score. And are you looking at a FICO, or are you looking at something that you don't even know that you're looking at when it comes to those free apps that you're using to track your score? So let's talk first about a hard inquiry or a hard pull versus a soft. A soft would be something where we are asking if we can pull your credit, because here's what's really important. We must have permission. Everyone must have permission to pull your credit before they do. Even if it's just a soft pull, they must have your permission. So sometimes you've got people that want to do a soft pull because they don't want a hard inquiry, and they think that there's going to be a problem with their credit, and they want to make sure whether or not it is showing up and it is or isn't a problem, maybe before they do the hard inquiry. When you do a soft pull, it does not affect your credit score. So as an example, if you pull your own credit, that is considered a soft pull, and that's not going to have an impact on your credit score. When it comes to a hard pull, that is a hard inquiry, and it can have an impact on your credit score. But, and here's the big but wait, like the commercial says, but it all depends on what you've been doing with your credit as to whether or not it's going to affect you. Have you been shopping for home loans? Have you been shopping for credit cards at the same time? Have you been shopping for new cars at the same time? Have you gone and gotten some installment debt at the same time? If you're having your credit pulled from a lot of places for a lot of different reasons in a short period of time, absolutely yes, that is going to negatively affect your credit score. But that's not typically the case. I mean, if you're just going and you're shopping for an automobile, and you're not doing all this stuff in a short period of time, it shouldn't be a big bad deal. The same thing goes for mortgages. If you're not doing all of these things all at the same time, then that hard inquiry for the mortgage should not be a big deal and should not have a big impact on your FICO. But remember, I said, what is it, a FICO or is it something else? Here's where a lot of confusion comes in. There are over 100 scoring models for credit reports. Yes, take that in. I said over 100 scoring models for credit reports. And basically, mortgage lenders toggle seems like between 1 and 3 of those 100. The other 97 are completely irrelevant to your mortgage loan, especially and mostly when it comes to those free credit apps that show you your score. A lot of them are showing you a Vantage score and not a FICO score. And sometimes those that are showing you a FICO score, it might be a FICO 5 when a mortgage lender might use a FICO 9. I know it's confusing. I wish it was an easier explanation, so I do apologize for that, but it's important that you know all of it. So if you want to simplify that, yes, do the free app. It's going to help you notice if someone's stolen your credit. It's going to help you notice if a bill reports late when you know you didn't pay that bill late. It's going to help on those things. When it comes to the score, use it as a reference point, okay? But don't expect that that's actually your credit score, because it's not. We have that conversation a million times a day in mortgage lending when I'm like, oh, you have a 662, and you're like, oh, I had a 705, what happened? Well, you never had a 705 in my world, in my grading scale. You had a 705 in Advantage, which isn't used for a mortgage loan. So I don't really know the point of giving that to a consumer, but that is just my 2 cents. So what I would do if it was me, and what I do is, let's say an automobile. If you go shopping for an automobile and you know what your credit is like you have an idea if it's good or bad, then don't have anybody pull your credit until you're ready to potentially purchase that car. There are so many times that people bounce around at auto dealerships and they're like, sure. And I see reports come across the desk where they've been 6 or 7 pulls from an automobile dealership. Don't let those people do that. That's one particular tip. Another tip is if you're going to shop for a mortgage loan, let them do a hard pull. We can't run a pre-approval if we're not doing a hard pull. Another example is, how many of you get so many offers in the mail? You're pre-approved for this credit card, and you're pre-approved for that credit card, and you're pre-approved for this line of credit. And then you read the very small print that's like 5-point font, and it says, this is not a pre-approval. This is an invitation to apply for credit. So in those instances, supposedly those have not pulled your credit, and I don't see how they could have or should have if you did not give them authorization to do so. Another way that you might have a hard inquiry is, let's say you call your credit card and ask for a credit line increase. A lot of times they're actually going to do a hard pull to see if they're willing to give you that increase or not. Some other examples of soft pulls might be the insurance company might do a soft pull. You want to ask them. I'm not in insurance, but I understand that they do a soft. Or a lot of times these days, employers are looking at your credit as well. Another big reason to keep that credit good and cleaned up. And that would generally be a soft inquiry also when an employer is looking at your credit for an employment situation. Now, according to FICO.com, FICO's research shows that opening several credit accounts in a short period of time represents a greater credit risk, like I mentioned earlier. When the information on your credit report indicates that you have been applying for multiple new lines in a short period of time, as opposed to rate shopping for a single loan in a short period of time, which is handled differently, your FICO scores can be lowered as a result. Although FICO scores only consider increase from the past 12 months, they do remain on your credit for 2 years. So as an example, when you go to apply for a mortgage loan, one of the things they do, and I suggest that the loan officer does it up front and not wait till underwriting to do it, is look at the inquiries and go through and say, hey, Target pulled your credit. Did you open an account? Yes or no? Banner Ford pulled your credit. Did you open an account? Yes or no? And go through each one, because if you did open an account, but for some reason it's not reporting in the trade lines, a debt might be missing that's going to pop up later that could really infringe on your budget and possibly on your approval as well. Now, if you apply for several credit cards within a short period of time, multiple inquiries will appear on your report. Looking for new credit can equate with higher risk, but most credit scores are not affected by multiple inquiries. If it's like, here's a few inquiries for an auto loan, here's a few inquiries for a credit card, here's a few inquiries for a student loan, versus like all over the board, like car, credit card, student loan, car, credit card, student loan, kind of isolated, if you will. So a lot of people are probably wondering how much credit inquiries will affect your score, and I promise to talk about that today. Now again, don't forget to like and subscribe. If you're looking for financing, we can assist you in multiple states. Please call the Weeks team at 985-300-LOAN or weeksteam.com, because we would love to help you. Please also share this video with others if you find it helpful. It helps the algorithm to push it out more so we can get everyone out there more educated. All right, now back to this. The impact from applying for credit will vary from person to person based on their unique credit histories. In general, credit inquiries have a small impact on your FICO scores. Remember, I said small. A lot of people are so worried about this. They should be less worried about the impact of a mortgage pull inquiry on their credit and more worried about the fees and the loan type and the interest rate. For most people, one additional credit inquiry will take less than 5 points off their score. For perspective, the full range of FICOs is between 300 and 850. Inquiries can have a greater impact if you have a few accounts or a short credit history. Large number of inquiries also mean greater risk. Statistically, people with 6 inquiries or more on their credit reports can be up to 8 times more likely to declare bankruptcy. And that's compared to people with no or low inquiries on their credit reports. While inquiries can often play a part in assessing risk, they play a minor part and only take up about 10% of what makes up the score altogether. Much more important factors in your credit score are how timely you pay your bills, your overall debt burden would be another great example, things like that. I hope this is really making sense. I'm really trying to make sure that I simplify the overwhelming credit confusion when it comes to credit in general and mortgages as well. I'm actually creating a whole entire playlist around credit, and I've got some lives I've done on a whole entire credit series that's still more to be recorded. And so make sure, and we'll put some links to some of these other videos in the description as well. So if you're really focused on credit and you're really confused about it, then I want you to have one place to go where you can get so much information. I hope that's really, really helpful to you. All right. So research has indicated that FICO scores are more predictive when they treat loans that commonly involve rate shopping, such as a mortgage, auto, and student loans, in a different way. So again, they're giving you a little bit of reprieve when it's obvious that it's isolated and you're shopping for a deal versus just trying to get into a bunch of debt so then you can potentially file bankruptcy, as they mentioned before. You typically want to shop for that loan within a 30-day window. That's usually the general idea of what they look at to like have you that less hits for the auto or the credit shopping or the mortgage shopping, as an example. Now, in addition, FICO scores look on your credit report for rate shopping inquiries older than 30 days. So remember, Lord, we want to keep that in a 30-day increment. For FICO scores calculated from older versions of the scoring formula, remember I said there's over 100 versions to use and several FICOs to use. The older version used to limit you to 14 days according to FICO.com. So I don't know about you, but I find that to be super, super interesting for sure, because the bottom line is, and the channel's all around mortgages. So the bottom line is, as a consumer, you need to feel comfortable to be able to shop for a mortgage loan, make sure you're getting a good rate, make sure you're getting a good deal with the fees, make sure you're with a lender that makes you happy and comfortable through this very big and stressful transaction, and you should be able to shop that. I'm not saying call 10 lenders because your head will spin and it will just drive you crazy, but to talk to 2 or 3 lenders is not a detriment, and it can actually benefit you more than hurt you. So I just wanted you to feel comfortable knowing the difference between hard inquiries, soft inquiries, how they affect your credit score, and so on and so forth. So I've got some other videos you can check out. I've got a course on everything mortgage, even to put together the perfect mortgage loan package so that you definitely get approved. And I've also got my book Mortgage Peace as well. So thank you for tuning in, and I really appreciate your time. I look forward to seeing you in the next one.